Reece Agland, Manager Member Integrity for the Institute of Public Accountants. Here today to talk to you about the 2012 budget measures in relation to superannuation and financial services. During this 2012 budget, there were only two major announcements in relation to superannuation. One of those had already been pre-released prior to the budget, and that has to do with the higher tax rate for high income Australians, whereby the government has proposed that those earning over $300,000 individually will have their superannuation taxed at 30% rather than at the concessional rate of 15%. So it's effectively doubling their tax rates. The government has said that they need to do this because they need to bring in more money for the budget and because high wealth individuals are those that receive the greatest benefit in relation to superannuation. While we accept that high wealth individuals might have greater capacity, we are concerned that this is just another example of the government reducing the benefits of superannuation. Often these measures tend to flow down further to other taxpayers. So we're concerned that it might start at $300,000 now, but in the future that might fall to a lower level. So we will keep members informed about that. The second measure, and one that disappointed us probably the most, was the government reneging on its promise to have a high concessional cap for those over 50 with less than $500,000 in superannuation. The government had proposed that those people who are over 50, and those are the people that probably most need to be able to top up their superannuation, would have the higher cap of $50,000 to help them to boost their superannuation. However, the government has decided to defer at this stage, at least for 2 years, that measure. Therefore, all taxpayers from next year and the following year will only have a concessional cap of $25,000. Now, this is going to impact heavily on a lot of people that have had long-standing plans about their retirement and had expected the government to go ahead with this promise and had put in measures to increase their contributions. So those people need to now renegotiate those plans to take into effect these new requirements, particularly in relation to the excessive contribution tax, that if they even go over slightly over the thresholds, then they could be hit with quite high penalty tax rates. The only other measure of note for members in relation to superannuation relates to the SMSF auditor registration. The budget didn't set out a lot in relation to this measure, and we're still waiting for the government to release its formal position. However, in the budget there was a little line there saying that the system was meant to start from 1 January 2013, so that's 1 January next year. The registration process will start, but we don't know exactly how long the transitional period will be. We understand that there will be a transitional period, so for people that are doing SMSF audits, they'll still be able to do those audits without being registered for between 6 to 12 months. This is in order to make sure that any of those that need to do additional education can do that before they have to be registered. We will keep members apprised of what happens when the government does make its final announcement, but from the budget we do know that there was likely to be up to 3 fees that will be levied. For those that have to do a competency exam, there will be a fee to sit the competency exam. There will also be a fee for registration, as well as an annual ongoing fee. So members will face probably up to 2 fees in the first year and then an ongoing fee. The budget didn't set out how much those fees would be, so we don't know. But what we do know is that the government is committed to a process of users pays, whereby those who are subject to regulations pay for the cost of that regulation. And we have seen in relation to financial licence holders that the fee for getting your own AFSL has gone up from about $300 to almost $1,500. Thank you.